Hi, my name is Andy Virgo. I am the Director of Buy to Let at Lendinvest, and today we're going to talk about technology and how it's shaping the future of buy to let lending. Now, a lot of what I do at Lendinvest when designing products is looking at how we're going to deliver those products, how they're going to actually get out into the market. 2020 has been one hell of a wake-up call for us, and it's forced us to work from home pretty much in the main. What we need to look at now is how the buy-to-let market may look in the future. And off the back of our recent experience, this session is going to examine how we can further evolve technology in the market and what it means potentially for the future landscape. Now, going back to quite an old quote, this is obviously very much an icon of the industry, Larry Page, the co-founder at Google. They were looking in the early days to build technology that everybody loves using and that affects everybody. I mean, they refer to things in here like, providing technologies that people want to use twice a day, like they use a toothbrush. I mean, it was an interesting concept. In the early days, they were just looking to make something simple. But, let's look back at what we've been through in the last year. Not everybody was able to work from home. Not every lender was able to carry on trading in the same way as they were back in January, February in 2020. Some closed their doors, some limited product availability, some reduced loan to values. Partly that was based on the fact that valuers couldn't get out and about. But ultimately, it could have been another reason as well. And that is that not every business has the ability to adapt. There's some people that are hamstrung by their technology. And this isn't new news. I mean, I did a presentation on Microservice versus Monoliths a couple of years ago. Some funders have legacy systems that have not given them the ability to adapt. They're the monoliths of the industry. But let me try and convey that in a way that makes sense around what I'm trying to explain here. So think about this toolbox. This is a toolbox that some of us may have. It contains everything you need from a DIY perspective. If you wanted to, imagine this is a system that a bank has, for argument's sake. If you wanted to delve into this toolbox now and find a certain size screwdriver, chances are you've got to pretty much move everything around in order to find what it is you're looking for. That spanner there, the screwdriver, the pliers, everything isn't easily accessible. You have to move something around. That's kind of like a monolithic setup in order to make replications of what it is you're doing. It's pretty hard to kind of reconfigure what you already have. The microservice, on the other hand, can be best explained by this setup, the toolbox where everything is split, everything has its own place. If you wanted to go and change those blue handled screwdrivers there on the bottom left, you could literally open the drawer, change them and replace them whilst not upsetting any other part of that toolbox. That's the microservice system. Everything has its place, everything's separate, nothing's thrown in together in one place that you can't access without disturbing it and going offline. Instead, everything has its place, everything has an easier way to make changes. And what happens when you want to build on those systems? What does a microservice build on look like? Well, you add another layer. You build it in the background, you build it on the side. You take out one of those drawers, you reshape it and remake it to something that you actually want the product to evolve into or the service to evolve into, and that's your microservice. So the lenders that have those approaches to how they set up in the background, they're not based around legacy systems. Those are the lenders that are more easily able to adapt to the changing requirements, whether that be new underwriting rules, new serviceability stress tests, whether it be new technology that's available in the market that can actually make things easier for an underwriter. So what about the journey then from a customer? Let's look at this from a sort of an as was, as is perspective. Going back in the good old days, certifying ID was the only way to prove to a lender that the person that is borrowing the money is who they say they are. And to be honest, that still happens now. Certifying ID, getting your broker to stamp something and sign that it's a good copy of what the real product is, that's there. But in contrast, we now have Jumio. There's on Fido as well. There are some other systems. Jumio have been a lot in the press lately. Identification, verification. Effectively, it's you get sent a link, you take a photo of your passport, and you take a selfie. The biometrics in the software allows confirmation that you are who you say you are, and your passport is legitimate. It's a bit like when you come back into the UK, having been on holiday, and you put your hand down you put your passport down on the scanner and look straight ahead at the whizzy blue light. That's effectively like a Jumio ID verification piece of software. And the days when you used to have to actually sign the document with a pen, good old-fashioned pen, you used to fax it or post it back to the lender. Well, now we've got DocuSign, we've got e-signatures. You can be out shopping, you can be doing your weekly shopping, Tesco, Sainsbury's, other supermarkets are available, and you could be reading your mortgage offer and signing your mortgage offer before you've come out of the supermarket. I mean, it's that quick. Makes it so much easier from a broker's point of view in terms of not having to delay things as well whilst information's coming through in the post or by fax. You know, good old-fashioned paying for things by check in the post. You know, we have now for many years had the ability to make payments online, but bringing that into the mortgage industry through systems like Stripe, you know, that's key. That's helping everybody move things forward again much more quickly. But what about the days when you used to send in bank statements or proof of mortgage conduct? Again, there are still some people that are using those preferred ways to gather their intelligence. Why don't you use open banking? You know, open banking from the perspective of a broker, a lender, a borrower makes sense, and we'll discuss that a little bit more in the next slide. What about those little nasty surprises further down the line when all of a sudden you find out that there's been some credit mishap that you and sometimes even the borrower didn't know about themselves? Well, credit-backed decision in principles. You submit your basic information. A soft search is carried out on the client, allowing the application to proceed to the lender in the full knowledge that the credit of the client is actually fine. And rate guides, I mean, sourcing systems, they're out there now. You know, rate guides, a thing of the past. How many brokers have got rate guides sat on their desk? And portfolio spreadsheets. We've got e-tech now, a hub technology where you can upload portfolios into the cloud. And that's something that will evolve further moving down the line. Lenders can just go in and pull the information down from e-tech and systems along those lines about the client's portfolio, saving the broker time. Now, what about the lender journey? You know, from our point of view, interfaces between software and systems, APIs, you know, that's key. Being able to do fraud detection checks through CIRA and CFAS very quickly, you know, automating those checks, checking at company's house about the limited company and the shareholding, land registry checks to make sure that the property is there, even down to the point of further Equifax integration further down the line. You know, being able to, as a lender, go and push at a button the request to go and get the client's credit profile up. And then when it comes to a lender checking the background portfolio, you know, linking into the likes of Rightmove as an AVM, and eventually using AVMs in the future as something that we use to value properties. You know, it's all there. It's all happening now, and more. You know, so let's look at open banking. I mean, this is quite a big one, and I think, you know, making a prediction, it should already be further ahead in terms of its take up. At Lendinvest, we incentivize for people to use open banking just to get some people used to using open banking, and off the back of that, what was initially a very, very low percentage, you know, sub 10% of our borrowers were using open banking. At one point, it was above 70% once we were incentivizing people, which of course everyone's going to say, yes, you know, people will use open banking if they're incentivized to do it. But once we took away the incentive, brokers were recognizing the fact that they don't have to upload loads of bank statements and proof of mortgage history It can speed up mortgage decision making. Anybody with payment deferrals, payment holidays, bounce back loans, it allows us to get a snapshot on somebody's credit. So brokers in the end were selling to the clients. Open banking is not Big Brother looking through your finances. It's just a page of summarising what it is the lender needs to know in order to make the right decision. 3 to 5 years' time, we will have forgotten that open banking was Big Brother. This has got to be something that more and more people will adopt and adapt to moving forward. So what's next? What's coming down the line? I mean, we've already got sourcing systems out there that we're having some great conversations with some of the techies within the sourcing systems, and they're looking to innovate and just provide more and more service through the activity that brokers have when interacting with sourcing systems. We already have a lot of lenders integrating with sourcing systems, so you can go straight from sourcing your loan into applying for your mortgage. Moving forward, what's happening? Sourcing systems are selling rate, criteria systems are selling the criteria, underwriters are selling speed of service. I'm not going to get into the whole conversation of why do we need BDMs, because we do. There are so many people that still pick up the phone for discussion around those weird and wonderful, awkward, complex buy-to-lets. There's always going to be a place for the BDM. And then when you look at artificial intelligence and machine learning, I mean, artificial intelligence, that's there in the personal loan sector already. Making your application, the systems are checking your finances, and then you're getting your offer, your mortgage, your loan offer in no time at all. And that's just machine learning. And then we've got robo-advice. I mean, there was a big discussion about robo-advice a couple of years ago. It hasn't really taken off. Probably won't take off in the complex buy-to-let sector. But you've got lenders trialing chatbots now. A chatbot that's learning along the way through its integration with some of the questions that are coming in. That's a positive. It's all about saving time, saving money, and people having the answers to questions at their fingertips. But what's all this kind of evolving into? It's evolving into a customer 360. I mean, we at Lendinvest are pulling all of these bits and pieces of information together and are presenting an underwriter with a single screen summary, a customer 360 on their habits, on their credit worthiness, on the security, on the details of the limited company. All of that combined together is being done in the background and is being projected onto one screen for an underwriter to make their decision much more quickly. And speed of service is where it's at these days. And what about moving into conduct-based decision making? I mean, a borrower who has a great clean payment profile with you as a lender, why are you not saying to that borrower now, well, based on the fact that you pay us on time every month, your credit is still in line with where it should be, and as far as we're concerned as a lender, you're still a good risk. Why do we need to underwrite those people moving forward? Well, we don't, and therefore we just need to look at the property. Thus, it's time saving. And at the end of the day, surely that's the whole customer-based decision making. That's just a retention product anyway. We all as lenders want to keep our customers as they move from the end of one mortgage period to another. So conduct-based decision making, making offers to people before they've even expired, that's there. There's more to come as well, but there's some secrets that obviously lenders are keeping to themselves. We have at Lendinvest a third of our business, a third of our staff are techies, to coin a phrase, and they are people that are working on integration, on products, on CRM systems, on all sorts of things that moving forward are definitely going to make the journey easier for people. So as I come to finish, effectively, everything that we do each day at Lendinvest is an aim around property finance made simple. Everything we do is focusing on making the journey more speedy, easier, quicker, and less painless. And we're integrating with all of the systems that are out there in order to make that happen, and building our own. So from our point of view, property finance made simple is what it's all about.